All right, ladies and gentlemen, good morning, good evening, good afternoon. Welcome aboard Options Weapons School number 3, session number 3. We are continuing taking our building block approach. This is a wing, this is an airplane, this is an engine, this is the weather, to this is how you take off, this is how you land, all the way up to this is how you sort and shoot enemy aircraft, okay? Building block approach here at Top Gun Options. Hey, the rest of the Options Weapons School schedule for this week is Tuesday at 1 p.m. We're going to do spreads. We're going to do bullish spreads, bearish spreads, and I'm actually going to bring in what used to be separate training into that because it only makes sense. There's bullish spreads, there's bearish spreads, and then there's spreads you can do if the stock, the ETF, or the index is just going to hang out a little bit. So I'm combining those Tuesday at 1 p.m. Wednesday at 1 p.m., we're going to do double verticals and burner trades. Again, taking that building block approach from what we did Tuesday and just adding on to it. And then finally, Thursday at 1, we're going to do synthetic stock and maybe take a look at long call diagonals, some differences between the two. But we're going to take a look at Bank of America. Bank of America came out with earnings, big beat. They're printing money. They've gone from being like a $25 stock and towards the end of last year, almost up to 45-ish, maybe almost doubling in 8 or 9 months. Great looking stock. So we're going to do synthetic stock training on Bank of America. Okay. Let's go ahead and get airborne. Like I said, building block approach. Our last session, session 2, I covered the basics of options, calls, puts. What happens when you sell a call, you buy a call, or sell a put, or buy a put, right? Remember, sellers have obligations. You sell your home, you're obligated to deliver the keys, right? Buyers have rights. I paid for this home. I have the right to have the keys to the home, okay? So always remember, buyers have rights, sellers have obligations, okay? All right, let's go ahead and get airborne. Anybody have any questions on session 1? We talked about intelligence gathering sources. We talked about our methodology, SOT, strategic, operational, tactical. And then finally, we talked about trade planning, our 7-step proprietary trade plan. If you ain't trading with a plan, you're a fool. Speaking of which, go over to the materials tab right now before we even start our edumacation and take a look at the materials I've given you right now. Okay. You have let me open these up just so you guys all have them as well. You have what's called the wheel tactic, okay? Not a strategy, it's a tactic. You have a covered call analysis blank kind of trade plan. You have one filled out to give you an example of what it looks like. And like I said, some terminology. What, different terminology that you hear. This is a quick reference guide to go listen to the terminology. I will post these resources on the replay page as well. Okay, so go over there and look right now. Like I said, this is the wheel tactic right here. Overall, you know what? View, where is it? Options. Attendees can view materials. Thank you for that heads up. Sorry about that. That's a switchology error on my part. I don't know why you have to come in here and click attendees can view materials. I want them to view them. I guess maybe it's a big reveal in the presentation and you don't want people looking at them until you do that. So now I answered my own question publicly. So here we go. The wheel tactic. There you go, Ann. The wheel tactic, covered call analysis complete, covered call analysis blank, and then the terminology. Okay. Any other questions, concerns? By the way, smart remarks. Like I said, if you're a member on the OWS, the Options Weapons School replay page, I'll put those over to the side. Okay, just like we had the trade plan and the OPCL, the options pocket checklist. Okay. Unfortunately, if you are not a current member, you don't get access to the replays, folks. You come out of pocket $97, folks. So session 3, here's the replay page. Let me give you this. Paste. There's session 1, there's session 2, and there's session 3 once we get done, and I post it up here. Scroll down and get access, folks. It's 97 bucks a month. I don't drink anymore. I used to say it's a really bad bottle of wine. For 97 bucks a month, you can get it. It's our gateway drug to get in here to Top Gun Options. Okay. Kind of foolish to do a monthly, to be honest with you, unless you just want to check me out for a couple months. Do the annual, you get 2 months free. And obviously, next week, we're going to do full throttle. You're going to get access to my live trade briefs, and you're going to see me live in action doing no kidding training. We'll do a little bit of that today because it's during trading hours. We're going to use a real life stock example, but this is definitely where you want to be. All right, here we go. Let's bring up our brokerage chain. In the options basics session, we talked about, shameless plug for Amazon, the stock we call the Death Star. I call the Death Star Amazon. It takes over everything it touches. We talked about buying Amazon shares or Amazon calls, and go watch session 2 if you have any questions on that. I was going to look at Amazon today for a covered call, but I'm going to choose a name over here called Mara. It's a Bitcoin name. It's a miner. Don't get me started on my personal opinion of all of this stuff. All right. Jamie Dimon apparently was a Top Gun Options member. Before he talked like this, I was talking like this about Bitcoin. The reason I like this is because first of all, it's 24 bucks, right? If we tried to do, some of these examples on Amazon, hey, Wiz, I want to buy 100 shares of Amazon today. It's 19 grand. Most people ain't running around in here with that, right? So let's use Mara as an example, okay? Again, it's a Bitcoin mining one. The only reason I really like Mara is because it's a heart rate monitor. It moves. It's got volatility, right? As an options trader, I mean, look at the 5-year chart. I remember when it was in the 80s, people are like, it's going to 1,000, Wiz. I'm like, okay, I got some pet rocks you can borrow too. So anyway, let's use Mara. When we talked about options basics, when I talked about buying a call or buying a put, right? That was pretty basic. When I talked about selling a call or selling a put, I said what? Do not ever do it if you're naked. Now, pretending we're all teenagers in this room, let's all giggle. Naked, in this case, is not good. The first tactic we're going to talk about is a covered call. Your shame is covered. You're not naked. Covered means that you own the underlying. If you sell a naked call, if you sell a naked put, you ain't covered and you can get destroyed. The tactic that we're going to start with is usually the gateway drug for most of you to become an options trader. Quick story, 1998, sitting in the ready room. No, it was the carrier qualification office, my office. I was a phase head of Marine Fighter Attack Training Squadron 101, Marine Corps Air Station, Miramar. Navy guy at a Marine station. Why? Because a bunch of idiots at Tailhook screwed up, and then they put Top Gun. They moved it from San Diego to the desert, banished to Fallon, Nevada. Better airspace and better stuff, but anyway. So, Hacksaw Reynolds, looking over my shoulder. Hey, Wiz, what are you doing? I'm trading, man. I'm Gordon Gekko. I trade. He's like, oh, all right, man. Well, I graduated from college, and for 2 years, I was a CFP, certified financial planner. Do you trade? It looks like you own a bunch of stocks. You trade options on those stocks, right? You sell calls against them and make free money. I'm like, get away from me, devil woman. Options are creepy and scary, and you're Satan. I was the man that I now make fun of. I was the young man. I, like many of you, believed all of that bullshit. He's like, whoa, 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 whoa. What are you doing? Let's go to lunch. Went to lunch at the golf course. I paid for this lunch because it changed my life. He's like, dude, you own 1,000 shares of whatever I owned at the time. He's like, pick a price you'd like to sell that at. I don't know, next month I'd love to sell it at this price. He's like, somebody will pay you for the right to take those shares away from you if it hits that price. I'm like, that sounds too good to be true. It ain't. Let's do this right now. let's say with Mara, if you wanted to buy 100 shares of Mara today, it's 2,500 bucks. Let's just do something kind of in the middle. Let's do 500 shares. Buy 500 shares of Mara for 12,500 bucks. Okay? My cost basis is 25. It's flopping around because it's Mara. My cost basis is 25 bucks. Okay? Let's just round down. I could, since Mara is a kind of volatile name right now, let's keep the chart in the background here. Let's just close the chart down a little bit. Hey, man, it's got a big pop, man. Looks, we've popped into the mid 20s. Maybe it hits 30 by next month. Let's go out to August. Okay? August of 2024. Quick reminder from session 2. At least on the E-Trade platform, when you see a month and a year, that option contract expires when? The 1, 2, 3, the third Friday of every month. I'm going to date myself right now. I was in the Chicago Board Options Exchange, the C and the CBOT, Chicago Board of Trade, in 2006, 7, one of those years, 8, when they came up with weekly options. Back in the day, we only had monthly options, and I walked uphill both ways to the Board of Trade in snow, which is not a lie in Chicago. But then they came out with, again, the guys in the smoke-filled rooms, hey, we have monthly options right now. Why don't we have like weekly options? Yeah. And then they came up with like the S&P 500 and other products are trading daily options and dividing by fractions. I'm even hearing that they're going to have hourly options. What could go wrong? But anyway, here we go. Let's say Wiz wants to sell. Man, I'd love, what would be, that would be a 20%. Man, if Mara went up 20% to 30 bucks in a month, I would love to get out of the stock. So what could you do? You could sell, ladies and gentlemen. Remember, one options contract is what? 100 shares of stock. So you could sell 5 of the August 30 calls. And what did I just do, ladies and gentlemen? How much were we spending? Let's just delete this. Buy 500 shares of Mara at 25 bucks, 12,500 bucks. I could sell 5 of the AUG 30 calls, and I just brought in what? What's 5 times, what's mid-market here? Let's just round up, $1.50. Ladies and gentlemen, you just lowered your cost basis, right? 5 times $1.50 equals, you just made 750 bucks. Let's talk through what happens. If by the third Friday in August, I think it's August 16th, Mara is trading below 30 bucks, what happens? Nothing. Well, you keep your 750 bucks. No matter what in this discussion of our covered call, folks, you keep the cash of the call that you sold. When you sell something, you make money. When you buy something, you come out of pocket. Give me a vertical head nod, right? So August, let's just be clear. August 1, 2, 3. It is August 16th. August 16th comes, stocks trading below 30. What do? I go out to September and sell. I want to still keep it at 30. Or you lower the calls or you raise them depending on what the underlying stock is doing. Let's just say you do that, folks, for 12 months. I mean, what's that? 750 bucks times 12 months. You could potentially earn $9,000 doing nothing. You essentially own a home or an apartment. Mara is your apartment. You are renting out your shares. Okay? If you did not attend this lecture and you owned Mara stock, you make money 3 ways. Buy, hope, and pray. You bought Mara shares, you're staring at them, they're not going up. You hope they go up, and then they're not, you pray. This is the point in most options conversations with people who are just stock traders. They go like they did at the golf course at Marine Corps Air Station Miramar. I look at Hacksaw and I go, why have I not been doing this for all of my life? And I never looked back. Let's go to August 16th. Closing bell sounds. Mara shares are at $30 or above. What happens? Nothing until Saturday morning. Saturday morning is when options settle. It's all electronic. In the old days, you went into Chicago, the Board of Trade, on Saturday with your book. You had a book. You find the dude on the other side of your trade and say, let's settle up, man. Now it's all electronic. You sold 5 AUG 24 30 calls. You are responsible to deliver 500 shares of Mara at $30. So E-Trade's going to go in and look at your account and go, okay, he or she has 500 shares. We're going to sweep those shares out. Excuse me. So you made what? 5 times 5. You made $2,500 on the stock going up to 30, and you made an extra $750 on the short calls. You made a very, very nice profit. Okay. And it's all automatic. You can also be a lot more tactical. Let's take a look at a closer, and let's cover this real quick. Let's say Mara runs up to 30, right? We do this trade right now. We place this one right now. Breaking news, Mara, Ganesh has come back to life and is going to be the CEO of Mara. The stock's racing. If you want to keep the shares, Wiz, I don't want them to get called away. I want to hold on to them. It's really starting to run. All you would do is buy to close those calls. Now, if you're somebody that's going to go, hey, I lost money on having to buy those calls back, I want you to choke yourself because you're an idiot. You are printing money as the stock goes up. You're taking a little bit of the printing money as the stock goes up to buy the calls back, man. Do not, if you're going to be a trader that says, oh, I could have made more money. After you made money, you're going to be a miserable human being, or you are a miserable human being. Do you understand me? If you want to keep the shares, just buy the calls back. Everything else is automatic. Unless there is some insane reason, 99.9% of the time, I let the stock go. Why? Because go look at your option tactic PDF. We're going to talk about a wheel in a little bit, but I just want to get the covered call out of the way. Okay. It's covered. There's no risk. The only quote risk, folks, there's 2 risks. Mara, which is a distinct possibility, in my opinion, goes to 0. You have the underlying risk of being a shareholder. Breaking news, Mara causes cancer. In after hours trading, the stock is at 0 right now. Holy shit. Well, that was your risk anyway, the covered call. Guess what? You made an extra $750 as it went to 0 anyway. The only other risk, quote unquote, is like I told you, is that the stock just starts ripping higher and you want to keep the shares. Then buy the calls back, dude. Ain't no biggie. Any questions on this? Now, if you're smart and you're not a political science major from me from South Jersey, if you do this every month, right? Let me delete this, the short call, for a second. Like I said, if we were buying 500 shares of Mara today, we'd spend, since it's gone down since I've been talking, it's still around 12.5. Wiz, you just said if I did these monthly short calls against my stock, I could potentially bring in $9,000. Yeah, over a year annualized. My God, man, you've almost paid for your stock. Imagine being just a chump who bought 500 shares of Mara sitting there on their hands. You ain't no chump. You are selling calls and bringing in money to lower your cost basis. Dollar cost averaging, folks. Now let's get a little bit more tactical. I spend $12,500 today to buy 500 shares of Mara. You know what? This thing is really tactical, man. I'm going to sell a close to at the money call out to Friday. What to do? We kind of peaked up here. Let's close the chart a little bit. We're up here right around 25 bucks. You know what? I'm going to sell 5 Friday, this Friday, July 24, 25 calls. Look at that, folks. What is 90 cents-ish times 5? You are bringing in 450 bucks this week. Again, lowering your cost basis. If by Friday, same discussion. It's under 25, nothing happens. If it's over 25, Sunday morning or Saturday morning, the shares are swept out of your account. What do? Monday, I wake up in my bunny slippers and my coffee, and I buy another 500 shares and do it again. It's a wheel. Now you're starting to see the wheel tactic. Any questions about was it for 450? 450 bucks times 52 trading weeks is 23,400 bucks. Ladies and gentlemen, buying 500 shares of Mara today was 12,500 bucks. Holy shit, Wiz. Not only if I did this, sold at the money calls every week to bring in 450 bucks, not only would I pay for my 500 shares, I'd double my money. Does everybody understand this? No, Mitch, what are we doing? Okay, good. We are selling an at the money call, right? We're buying 500 shares. Buying 500 shares, which is what? At the money. At mid-market, right? So, ladies and gentlemen, on your screen, I just showed you an incredible cash generating tactic. One more time with Mara, folks. I think it's a Ponzi scheme and a joke. It's a foray to me. It's Vietnam. I've been burned on Mara. I printed money on Mara. I've been burned on Mara. I made half my money back. I'm like in a gray area with Mara, but I like using it as an example because it's got movement. I strongly recommend you go do this. Go Google high dividend stocks. Why? Because you can do this tactic with what? A high dividend stock, folks. So you can do on average 7.5, 5 to let's just do this, 5 to 10%. When I was doing this covered call tactic and this wheel, easily making 10%, if not more, a month. I have buddies who run hedge funds who do this. It's a strategy. They write in their prospectus like 5 pages of selling calls and cash secured puts, which we'll talk about in a second. It's so funny. But if you find a high dividend stock, you're also cha-ching and cha-ching and cha-ching, and you're making money because you're what? You're a shareholder. Thursday, when we talk about synthetic stock, I'm going to remind you that you ain't a shareholder. You're using options to be long the stock. Let's look at this risk diagram. I've told you what is the first place you always go to look? Max potential loss. What is your max potential loss in this trade? Mara goes to 0, dude. Yep. Your max potential profit is 510 because we sold an at the money call. Let's do like the $26. Let's go just $1 out of the money. Let's do the 26 call. How much can we make? 870, right? Because we bought the stock at 25, we get $2 of upside with the stock, right? 5 times 2 is 10. So you make $1,000 on that, and you bring in money from the short call, folks. Okay. So the beauty of this is what? You pick the price that you want your shares called away at. I would be honored if the stock got to this price. Well, potentially there's somebody out there that's going to pay you for that, right? Because why? On the other side of that trade, somebody's like, dude, are you insane? By Friday, Mara's at $40. You're an idiot. I'll take those shares at 25. Does everybody understand that? Diane, you have absolutely zero responsibility for a dividend if you sold some calls. When talking about a covered call tactic, owning the shares, if you are a shareholder of record on the ex-div date, you get the cash. You get paid whatever that little dividend is. Okay, so dividends have nothing to do with a short call. Absolutely nothing at all. There's an obscure tactic that some people might do with this that we won't even talk about because it's beyond the scope of this lecture. But no, do not worry about this at all. Now, any questions on the covered call? I absolutely love it. And I love giving this brief again sometimes because I'm like, you know what? I miss this tactic. But you know what I don't miss? Coming out of pocket, the 12 grand. My mom, whose money I help manage, I do this stuff all the time. It's conservative. This is a nice conservative cash generating tactic. Does everybody understand that? Give me a vertical head nod. Any questions on this? Okay. All right. Let's do the exact same trade, but inverted. What do I mean by that? With Mara, I think it's getting a little bit of a run. Look at this rip your face off rally, this run. Looks like it's popped above 23. I could sell these puts. Let's sell 5. We'll just stick with 5. Sell 5 of Friday's 24 puts. Sellers have obligations. If you sell 5 July 24 puts, you are obligated to deliver those, right? So what's the max potential loss? $11,720. Why? Because Mara can go to 0. Do you remember what the covered call diagram looked like? Does this look like the exact P&L diagram, but facing the other way? The answer is yes. Why? You have the same risk profile. If you own 500 shares of Mara, you're on the hook for $11,720. If you sell these puts, you're on the hook for what? $11,720. Now, for me, this would be called a cash secured put because I have enough in my account. I don't think the broker requires the full 11,720. I think it's a ratio. I forget what it is. Don't call your broker and ask. You don't need the full 11 grand in there, especially since it's 0.000001, the odds of Mara going to 0 by Friday. It's the odds of getting eaten by a golden retriever are never 0. Does everybody understand that? A cash secured put has the same exact risk profile as the covered call I just did. So now you and I are building this wheel tactic together. What do I mean? I'm going to sell 5 July 24 puts. I'm going to bring in $270. First of all, what's my break even? Well, I sold the 24 puts. What's 24 minus 53 cents? 23.46. So as long as Mara stays above that break even, 23.46, I make money. Okay? But let's talk about this. By Friday, if Mara stays above 24, what happens? Nothing. No matter what, you keep $270, right? 270 times 52 trading weeks is $14,000 a year annualized. Okay. You could sell a cash, and that's weekly. Let's do the monthly example. that was stupid. Let me do the monthly. We started the covered call with the monthly. I should have done it this way. Let's sell the 24 out a month, 5 contracts. Sell 5, AUG 24, 24 puts. Now this is a little bit better. I'm bringing in $1,100, right? 1125 times 12 months. Yeah, about 14 grand. Isn't that interesting? Whether you're doing the really tactical weeklies or a little longer dated monthly, it's almost the same amount of money. And do you know what Uncle Wiz usually prefers to do? The longer dated ones. Why? Because the tactical, everybody looking, I enjoy my life, man. I saw a cash secured put on that stock out a month, and I'll look at it in 3 weeks. That just reminded me that you've probably heard this session, not from me because I don't do snake oil, marketed like this. Have you ever gotten an email from a shitty competitor that says, join me tonight at 8 o'clock for a brief on how to buy stocks at a discount? This is all they're going to show you. If you like Mara, pick a price you'd like to buy it at. Well, I really wish, if Mara went down to 24, I'd love to buy the stock. Well, guess what? You're going to get paid. Somebody's going to pay you for that, right? But what most of the snake oil salesmen neglect to tell you in that brief is stocks go down for a reason, right? People are always like, oh, I'd love to buy that stock at a discount. Why is it a discount, right? Porsche, and you go to a Porsche dealer, there is no negotiation. It's a Porsche, right? So buying stocks at a discount, the thing went down for a reason. Be leery of that type of marketing. But everybody's following me, which is good. Sell 5, AUG 24, put at 240, $1,200 right now. Third Friday in August, it's above $24. You sell the September. You sell the October. You bring in $1,200 a month. You wake up or you watch Mara close on, let's contingency plan real quick. Let's say you don't want to take delivery of the shares. Oh my God, Wiz, Mara's really starting to implode. Buy the puts back. Okay. It's going down to your discount, but if it's going to be a super discount, you don't want it, just close it. Buy the puts back. Okay. That's one contingency plan. Mara starts imploding. You don't want the shares. Let's go out. But let's say you do. Wiz, I don't mind it's imploding because, as you said, it's Mara. It's a heart rate monitor. Look at this. Up, down, up, down, up, down. That's what this thing does. When I was doing this tactic on Mara, I did this all the time. I'm like, oh, geez, it's imploding again. I wonder if it'll ever go back up next week, completely up. Right? So that's situation 1. The stock's falling. You don't want the shares. Buy the put back. Situation 2, the stock's falling and you don't mind taking delivery of the shares. Well, then guess what happens? Saturday morning in your bunny slippers, E-Trade's going to go look at your account and say, Wiz sold 5 of the AUG 24 24 puts. Mara closed at $23.99. He doesn't have those shares in his account now because remember, sellers have obligations. I was obligated to deliver those shares at $24. I don't have them. Now I do. They put shares into my account. Now I am long 500 shares in my account. Okay. Now, ladies and gentlemen, I don't even need to show you the PDF. You have been fully briefed on the wheel document. Why? Because Monday morning, bright and early, stretching, do my meditation. There's my 500 shares of Mara. What do? I go out the Friday and I sell the at the money call. Now you can see this is called a wheel. Sell a cash secured put, don't get the stock. Sell a cash secured put, don't get the stock. And I'm keeping premium. Sell a cash secured put, hey, I got to sign the shares. Selling at the money call. The shares didn't get called away. Sell at the money call next week. Hey, the shares got called away. Sell cash secured put, sell cash secured put. Does everybody understand that? I got buddies in Greenwich who do this tactic as their hedge fund and they think they're brilliant. That's it. You can do a 10, 15% a month return, folks, just doing this. Covered call, cash secured put, same exact risk profile. Any questions on a cash secured put? Remember the word cash secured. Just about everybody in this room, including me, I don't even think I applied for it. I didn't even apply for level 5 options trading. I do not want to sell naked puts. I'd kick my own ass. No naked put selling. Cash secured put? Yeah, I got the cash in my account. Hey, I took delivery of the shares. I love these two tactics. The only thing I don't love about them is coming out of pocket, to buy the shares or to have the cash secured money in my account for the put. Any questions on this? This is super, super awesome. Now, how much time do we have? Let's cover. So we covered covered calls, cash secured puts. Let's do a tactic. Let's stick with Mara. We're going to buy 500 shares of Mara today. 12,500 bucks. Okay. Well, Wiz, a couple things. I like that I can bring in cash selling an upside call against it. That's pretty damn cool. But, dude, you just showed me that after looking at the chart of Mara, it's all over the place. But I can't deal with one of these drops to the teens, man. Look at this. What could you do? Ladies and gentlemen, this tactic is called a collar. We could sell, let's go out a month. Let's do the August thing again. We could sell the AUG 24, what did I say, $30 call? When we sell 5 of the $30 call, we bring in what? It's still about 750 bucks. I'm putting a roof on it. If it goes north of 30, I'm going to be super happy. I made $5 on the stock going up and I made 750 bucks. I'm super happy. Yay. Let's contingency plan. Wiz, that thing looks like it's a heart rate monitor, but I don't like heart rate monitors, man. I want a little protection. What could you do? You could take the 750 bucks you just brought in right here and do what? Buy a put with it. Why don't we buy 5 of the AUG? I don't know. Let's just spitball here. Where did it pop from? 22, 20, it was topping out around 22. Why don't we buy a 22 put for protection? And I love how awesome I am. I just spitballed that, and look at this, folks. They're almost the exact. They're close enough. The put's a little cheaper. See that? $1.50 and $1.37. You're still making a little bit more with this short call. Ladies and gentlemen, this is called a collar. You put a roof on it with the 30 calls that you sold. You're bringing in money, right? When you sell calls right here, you bring in money. When you buy puts right there, you come out of pocket money. So on your screen, ladies and gentlemen, is a tactic called a costless or risk-free collar. That lecture I just gave you, I think I charged $100,000 to hedge fund guys, and it took 8 hours to brief it. Why? Because they might be long 100,000 shares of Amazon. Wiz, we're worried about our Amazon going down. I wouldn't, but dude, you own 100,000 shares of Amazon. Why don't you sell an upside call? Would you guys be happy if somebody called away your shares at Amazon at this price? Yeah. Sell those calls, take the cash, and go buy some puts to protect it in case it falls. Oh my God, you're Nostradamus. No, I'm kind of an idiot. So for all the people in this room right now that are long stock, I got a lot of stock in my account. Welcome to being an options trader. This is the gateway drug. These are your training wheels: covered calls, cash secured puts, collars. Then I'm going to kind of take your training wheels off and we're going to ride down the street, because you don't need the underlying stock, baby. If it flies, floats, or fornicates, or faces the ocean, you rent it. We are going to rent stock with call options or puts. Ain't no reason to be a shareholder unless, one more time, you're doing this stuff. Find a high dividend stock and do covered calls against it. I will tell you, let's think through this as logical people. If it's a really high dividend yielding stock, I'm going to guarantee 99.9% of the time, most high dividend stocks don't have a lot of volatility, man. They're stodgy, solid companies. They're not a heart rate monitor like Mara. So what's that mean? There's probably not a lot of volatility in the options. So selling calls, a little out of the money usually ain't that profitable. The market's not going to say, hey, we're going to pay you a lot of money for selling really out of the money call options on the stock. It's not going to get up there, dude. You're not going to get paid anything. Let me give you my month out rule of thumb. Sit up straight and write this down. I don't think it's on the SOP. I should probably add it. You ready for this? Here we go. This rule of thumb I'm going to give you is for 30 days out. Let's go back to Amazon as a better example. You ready? This is perfect on the screen. If something is on a gentle climb schedule, what do I mean by that? That is a gentle climb schedule. That's a gentle climb schedule. If it's on a gentle climb schedule, I sell calls that are about 2.5 to 5% out of the money. Amazon's trading at 194. Do the math on your own. I will sell calls 2.5 to 5% ish out of the money, 30 days out, if the stock's in a gentle climb schedule. Everybody understand that? If it's on a tear, gentle climb schedule, tear. If it's on a tear, I will sell calls 7.5 to 10% out of the money. Why? It's on a tear, dude. I need a little bit of cushion. If it's on a gentle climb schedule, I don't need that much of a cushion. Makes sense, doesn't it? Any questions? Write those down. I'm going to give you a little bit of a Venn diagram. You ready? Tear, gentle climb schedule, flat. I forgot this one. If the stock's hanging out flat, I'm going to just sell at the money calls. 2.5 to 5, 7.5 to 10. I'm going to add an arrow to this. Tear, gentle climb, flat, down. Ladies and gentlemen, if you own stock and it starts going down, but it's just a gentle, it's not going to zero, everything's fine. It's just a normal profit taking, pullback, whatever. Earnings miss at the money. Or, you ready for this? In the money. Let's go use Mara as an example. Out to Friday. Buy 500 Mara. I am pretty damn sure I know this stock. By Friday, it's down at 22 bucks. You could sell an in the money call. What did I say? 23 bucks. Sell 5 of the 23s. Ladies and gentlemen, 5 times 250. Look at that. 5 times 250. You're making $1,250. You're bringing in those short calls. If you think, let's pull up the chart. You could sell in the money calls. I think this thing's going to, look at this, Wiz. It's going to give up the ghost. What's down here? 2250. This thing's, it pops on Mondays and it gives it back by Friday. You could sell in the money calls. Look at where your break even is. 2281. I used to, when I would buy shares and I was this type of guy, I did this stuff all the time, man. You could sell, if you think the stock's going down, selling in the money call, man. The people on the other side of this trade are like, are you insane? Mara's going to 30 by Friday. No, I'm not insane. I think it's going down to 22 by Friday. That's what makes a market. Does everybody understand that? So I gave you my Venn diagram. Tear, 7.5 to 10. Gentle climb, 2.5 to 5. Flat at the money calls. Going down, in the money. Any questions, concerns? Oh, by the way, smart remarks. Everybody understand this. I love doing this stuff. This was a good academic training session. Covered calls, high dividend stocks make 5-10% a month. You will beat the average hedge fund if you do this covered call strategy. I'm sorry, the wheel tactic. Cash secured put, cash secured put. Hey, I got the shares. Covered call, covered call. Shares went away. Ain't no risk, baby, except the underlying, right? Ain't no risk. That's why I usually do covered calls and cash secured puts on solid names. Or if you're going to do it on a Mara, at least you're honest with yourself. Whenever I've dabbled in Mara, the first thing I say in a live trade brief is what? This is a foray. Some forays, Vietnam, Korea, don't go well. Other forays might go well, but I define it. I don't come into a brief and go, let's just do this. I'm like, these are dangerous. Risk, reward. No risk, no reward. So that's why, playing with a Mara a little bit can be fulfilling or it can be painful. You bet, Diane. Jim, if selling in the money, would you always do it just above the break even? Not necessarily, Jim. I mean, there are times when I've owned stock and I'm like, dude, this thing, there's some bad. I've owned stock and my cost basis is like really low and it's all profit up here anyway. I'll sell like a deep in the money call because it might be going down. So it's just situation dependent, Jim. I get what you're asking, but I don't have a fixed rule around that, to be honest with you. But if I know something's going to roll over, I'll do in the money. I'll sell some in the money calls. No, Paul, great question. Hey, Paul, if you can't see it, do you always keep the collar expirations on the same date? Should the put ever be way out in the future? The answer is absolutely dependent, man. For academic purposes, I kept them in the same month, right? There are some people who, are long stock and they sell weekly options to bring in some premium. And then they'll go, to your point, Jim, out to October, January and buy a disaster put down here, right? So, and that's actually a good idea, man, because like you don't have to necessarily manage it. You could be, Wiz, I love this stock. I just want to protect it for a while. Sell weekly call options, but have a longer dated put underneath it and forget about the put. It's a set it and forget it. I insure my home. I insure my car. I'm insuring this stock. But unlike home and car insurance where I'm paying out of pocket, I am getting paid to pay for my put, my insurance out here. Isn't that cool? I absolutely love that. So that is a great question. So long answer to your short question. The answer is no. You don't have to. And you know what, Paul? The answer to that is the example I gave of August and August is called a married collar. And again, when you look in the OPCL, the options pocket checklist, and you see 9 different names for the same tactic, don't get frustrated. It's just do it, right? You don't have to necessarily label things, but if you have a short call and a long put around your stock for the same expiration, it's called a married collar, right? Because the strikes are both August. But I think that's a great idea, man. Wiz, I'm worried about the election. I want to buy some puts all the way out to November. Great. Have somebody, I'm cheap, man. Have somebody else pay for those long puts out to November. Okay. Awesome, folks. That was some really good training. Just ask me. I really appreciate your attention. Everybody should have the link to attend the rest of the Options Weapon School sessions. If you came in a little late, let me give it to you right now. Copy registration link. Let me put it in the chat box. We will do bullish, bearish, and neutral spreads in our Options Weapon School session number 4, Quattro. Any other questions before I go? Those were all some good questions. Don't forget, folks, if you're not in the Hunters, we do have a ready room. Go to the ready room, click right there, and you can ask me questions in here. Obviously, if you're in Max Afterburner or the Hunters, you can go into the Intel commentary thread and post it there. Okay. You can ask me questions in here about any of that stuff. And the protected put would be at the 20%. And that's me. That's not a Wall Streetism. That's a Wizism. Most people and market participants say the S&P is in a bear market, or hey, this stock is in a bear market. When the stock or the market drops 20%. So that's my rule of thumb. I also call it a disaster put. What would be a disaster? It would be a disaster if the stock dropped 20%. Okay. So that's just my rule of thumb, man. Some people 10, some people 30, some people 50%. That's my horror is this, if 50%. 20 is good for me. 20 is kind of right in the middle. Robin, you didn't see my earlier question. Can this be done with leaps? You bet, Robin. So in our covered call can't be done with leaps because you're using stock. On Thursday, we will do what's called synthetic stock training, where I will show you how you can do similar tactic without coming out of pocket $12,500 to buy Mara. Long answer is, or short answer is yes. Long answer is Thursday at 1 p.m. Okay. All right, guys, I got to get going. I got to get ready for that next brief. This will be on the OWS replay page if you are a member. If you are a free person here, I'm a free person. You get to watch this free on this page. This will be up here and give me about 30 minutes. It takes about 30 minutes for the recording to render. Okay, so it will be on, where is it? Oh, it's right here. Wrong replay page. Well, it's kind of easy to remember what it is. Go.topgunoptions.com/OBT, options basic training -replay. Okay. Awesome, folks. Appreciate the questions. I love that you folks are engaged in asking questions. Like I said, if you're not in the Hunters or the Max Afterburner, put your question in the ready room. If you are in the Hunters or the Max Afterburner, you can hit me up at any time, especially when I'm mobile on my app. All right. Replay posted here in 30 minutes. I'll see you in a little bit for Options Weapon School session number 4. Have a great rest of your day. Happy hunting. Make sure you're hedged up here at market highs. Fights on, namaste, and basi basi, which means truth. Wiz out.